Good afternoon, everyone, and thank you for tuning into Money Control. My name is Karunya Rao, and we are here to tell you what exactly to expect when HCL Technologies delivers its Q1 earnings later today. Joining me in this conversation are two of my colleagues who track the technology space very closely, one from a sector standpoint and the other from a market standpoint. Chiranjeevi is here with me to talk about what market expects from the numbers this time around, and Devangana is here who tracks the company very closely as well. Guys, thank you so much for touching base. Chiranjeevi, I'll talk to you first about the analyst expectations this time around from HCL Technologies. Just to put things in perspective, we all saw what happened with TCS's earnings.
Yeah.
A softish quarter, weighed in largely by currency headwinds. There was seasonality at play. The demand was moderate. Outlook also failed to cheer the market sentiment. Talk to us about what happens now with HCL Technologies. Should we expect a softish quarter from this one as well?
Well, Karunya, I mean, the expectation all around for IT sector in general was quite moderate, and on top of that, we had the sort of earnings that TCS brought out not so long ago. If you look at the stock performance in the run up to the earnings for HCL Tech, clearly down about 4%, 4.5% for the past week, down about 17% in the past quarter. So clearly, expectations are not that high, and it has only gotten more moderate with the sort of earnings that sector leader like TCS has brought out. Now, if you look at the hard numbers, at this point of time, analysts are expecting a sort of sequential decline of about 6 to 10% in the consolidated net profit of the company. Remind you, last quarter, they posted a net profit of about 3,593 crores. On the revenue side, you're expecting a moderate growth of about 3% on a sequential basis, which is not bad considering the sort of macro environment that the IT space is in at this point of time. If you look at the dollar revenue, which is also a very critical barometer for a company like HCL Tech, that is expected to be even more moderate from the rupee revenue growth. The dollar revenue is expected to grow about 1 to 2%, which is very muted. If you look at what the past quarters have given for a company like HCL Tech, the key thing, of course, the key talking point out of TCS's earnings were definitely the margin side of the business. Now we know that the IT sector's margins have been under scrutiny over the past 1.5 years because of rising wages, the talent war that is on, and now the cross currency headwinds that we are seeing across the world. So, in terms of consolidated EBIT margins, analysts are expecting about a 40 to 50 basis point sequential decline. If you look at it on a year-on-year basis, the number goes as high as 200 basis points. So clearly, margin is expected to underperform in the June quarter on the back of course, higher wage costs that a lot of IT companies are seeing at this point of time. Attrition rate is expected to be higher again this quarter, so that will be something to watch out for. But of course, with
I
IT
just want
sector,
to bring in Devangana as well. I just want to, hold that thought. I'll bring in Devangana as well into the conversation. What are the big trends that are likely to play out this time around as far as, the tech heavyweights are concerned? Of course, the headline numbers is something Chiranjeevi has flagged off. But in terms of qualitative monitorables and commentary, what will you be watching out for HCL? I think you're on mute, Devangana.
Yeah. So,
Yeah.
Karunya, I was saying, like CJ was pointing out, I would again here like to take a cue from TCS's results last week. TCS's CEO Rajesh Gopinathan clearly pointed out that although they have a strong deal pipeline, the company is going to stay vigilant in terms of further growth given the ongoing macro headwinds and uncertainties globally. So now that is something that I am going to watch out for. What is the HCL CEO CVK's commentary going to be around, and whether he is also going to expect a similar caution? Is there going to be an air of caution in today's results? Another point I would like to mention here, HCL last quarter mentioned in terms of its FY23 guidance that the management will expect revenue to grow at 12 to 14% in this fiscal in a constant currency basis. It's expecting EBIT margins to grow at 18 to 20%. So now this will be interesting to watch out whether the company is going to update these numbers, or is the business pretty much in line with those estimations given the ongoing headwinds again.
Hmm. What is the attrition picture looking like right now? I mean, that has been a big pain point, Devangna, as we all know, for the industry. There's been a massive churn.
Right.
Is that also going to be a pain point again this time?
I think it's pretty much expected. So last to last quarter, HCL's in Q3, HCL's attrition was at around 19% or so, and then it went on to 21.9% in Q4. So HCL, what it is saying is that HCL is going to hire more, outsource more rather from what it calls its new global frontier locations, which includes Sri Lanka, Vietnam, Costa Rica, Romania, Mexico, and also Brazil. That's where it's also looking to hire.
Okay.
Again, and this is also very much in tune with the fall in operating margins that CJ pointed out he's expecting this quarter as well. So last quarter, CEO CVK pointed out that the dip was largely due to talent model transformation, where the company is currently heavily investing into. So now this involves large-scale fresher hiring, nearshore delivery scale-up, and also talent skilling and training investments. So these
Hmm.
two things are correlated. And what's the update there? What's the plans going to be ahead? So that is again something I'm going to watch out for today.
CJ, you were also talking about attrition. I mean, when when I interjected, but talk to us about what the street, how the street is looking at this, and how big a factor it is, when it comes to market reaction as well. You're also on mute, I think.
Yeah, I beg
Yeah.
your pardon for that. Attrition, of course, has been a dominant talking point, but I think there is also a feeling, especially after TCS's earnings and TCS's commentary on attrition, that possibly we are now seeing the peak of the attrition impact on IT sector. Going ahead, they expect a lot of analysts expecting that a lot of these situations might start slowing down, or the attrition might start moderating from the second quarter onwards. Let's not forget that a major reason for the attrition that we were seeing in the IT space was also the startup space, which was hiring like anything, last year and the year and a half. And we know that growth there has slowed down because of the ongoing funding winter there. So there is an expectation that probably with labor force having lesser options to go out there and get jobs, you could see a lot of these IT sector companies being able to retain a lot of those talent and probably at a lower cost going ahead. So that is something that investors will clearly watch out for. One point that I would like to make here is the on the margin front. I think Demangna mentioned about, of course, the growth guidance of about 12 to 14% that the company suggested last quarter, and whether there is any change there. But the margin profile will also be very important because they've suggested a growth of margin of about 18 to 20% band. Now, whether they downgrade this going ahead in the June quarter for the rest of the year FY23, that will be very important given the sort of commentary that we have seen coming in from analysts as well as TCS last week.
A lot of brokerages and market watchers have also turned fairly cautious or fairly muted in their projections, in their outlook for the sector,
Yeah,
and for many of these heavyweights as well. Names like HCL, Wipro, we've seen deep double-digit cuts coming by this year, and
yes.
most of the IT pack, of course, has been a victim of the recent carnage, but many of these names have come off significantly. So, what do you think? I mean, has these companies, have they bottomed out? What are you picking up from the market sources? Are they okay with the current valuations, or do they foresee more pain when it comes to IT sector and IT sector stocks?
I think Karunya, if you speak to a lot of people out there, of course there seem to be two views out there at this point of time. Of course, one view says that recession fears have just only started with respect to the US and of course European Union, which are two of the biggest markets for IT services company, and they clearly are not reflecting in the multiple contraction that we have seen in the past 6 months, and therefore there is some leeway for downside going ahead. But the other side is, saying that possibly given the sort of contraction that we have seen in these stocks, maybe the worst has already been factored in. And given the fact that, the IT sector's dynamic itself has changed. In the past, the argument now is that in the past, if there was a recession in the US or in the EU, you would expect that clients will totally cut down on discretionary spends, which will include IT services spends or outsourcing spends. But now, because the nature of the industry is changing in terms of companies relying on IT as a necessity instead of something as a discretionary item, there is less likelihood of sharp decline in deal wins or IT spending from clients abroad. So I think that is where a lot of investors with longer time frame are looking at this correction as a good entry point to buy into a lot of these names, which were probably unaffordable just 6 to 7 months ago. So I think there is still a two-way lane at this point of time in the market, and only in the next 1 or 2 quarters will we be able to definitely tell whether the sector has bottomed out or whether there is room for another 10 to 15% correction in this space.
Okay, okay. But Devangna, with respect to commentary, up until now, we've not seen anything alarming or anything very concerning when it comes to these companies and the management commentaries
Hmm.
with respect to what's happening in bigger markets, in Western markets. No fears of recession or slowdown have trickled in yet. So
Hmm.
do we expect any of those signs or signaling in the commentaries this time around? What will be key to watch out for, or the deal pipeline perhaps?
Hmm.
What would
Hmm.
be the top 2 3 pointers to sort of watch in the fine print?
Hmm. For HCL, I would say their product and platform business will be something to watch out for this quarter. Last quarter, on a sequential quarter basis, that particular vertical degrew by almost 24%, and it contributes 10.2% to the revenue mix of HCL. So now, what's the recovery plan looking like? How it's going to go happen? How it's going to shape up going ahead? Whether the customers have the appetite for discretionary spending in this vertical will be something I'll be watching out for. In terms of TCV, analysts are expecting deal wins and TCV to grow from 1.7 billion from last quarter to over 2 billion this quarter. So nothing that interesting there. Obviously, like you rightly mentioned, that the managements and CEOs are being pretty mum about the recession. They are saying that deal wins and the demand looks robust, like TCS did in
Yeah.
its results last week. But we can't miss out the factor that they just added 14,000 new hires in Q1. Given that we know that for IT companies, hiring is kind of proportionate to the kind of demand they're expecting. But again, we don't know yet. The management there also pointed out that the deal wins and demand looks great for the upcoming quarters. Well, in the case of HCL, though, the CEO and management said that they are expecting attrition rates to start stabilizing from mid of FY23. So let's see how that shapes up today.
Yeah, that would be interesting to know for sure. I mean, how things have panned out and how they're shaping up as we speak as well. So it's only a matter of few more hours before HCL declares its numbers. We at Money Control will be getting you a detailed analysis of how the quarter turned out. But that's all we have in terms of preview and in terms of expectations. Thank you so much, Chiranjeevi and Devangna, once again for joining in and giving the viewers a heads up on what to watch out for.
Thank you so much for having us.
Thanks for having us.